I guess, to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com.
What if you could have an in-depth understanding of the stock market just like the pros? Well, thanks to Phil Grande and philsgang.com, you can. philsgang.com offers comprehensive, up-to-date market information designed to help you understand and anticipate market behavior. With philsgang.com, you'll build your investing confidence even through down cycles and periods of uncertainty. Go to philsgang.com. philsgang.com today. 877-600-GANG. 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. I've been doing this business of trading over 55 years. God, they make it so complicated. It doesn't have to be. The best way to learn is to follow me, my actual investments. That's right. When I buy a stock, you follow me. Do exactly what I do. That's the best way to learn.
Check out the free 10-day trial. Learn more at philsgang.com.
Be my co-pilot at philsgang.com. Do what I do.
That's philsgang.com. If you invest in the stock market, take a moment for this important advice.
Hi, I'm Phil Grande at philsgang.com. You've got to stop listening to the fake business news networks because they tell you what you want to hear instead of what you need to hear.
Phil Grande guides you step by step on investing.
You're going to know exactly what the tone of the market is. Do I sell? Do I not sell? Do I buy?
All you need to know is philsgang.com.
Check it out. philsgang.com. philsgang.com.
If you want to invest your money and grow your wealth, listen to this.
Hi, I'm Phil Grande at philsgang.com. I get so tired of listening to the same garbage every day, listening to the fake business news network telling you why you should buy this stock, why you should buy, and they're always wrong. Join my gang, philsgang.com, free for 10 days. You're going to learn when to buy a stock and when not to buy a stock. Hey, years ago it was different. You could buy a stock based on fundamentals. You could buy a stock based on earnings. You could buy a stock based on PE ratios. Those days are gone. That ended with QE. That ended when they financially engineered the market in 2008. Gone. Now you got to follow the money. And we have the knowledge because we have the chart. Pro 2 color-coded chart tells you when to buy, when to sell, when to run like hell.
For a limited time, you can join Phil's Gang free for 10 days.
Check it out, philsgang.com. Get the truth, get the knowledge, and understand how the market really works.
I've been a Phil's Gang member since 2014. Over that time, I've generated over six-figure profits. Following Phil, his charting system has really been a huge impact on my career and my life. I would recommend Phil's Gang to the mom and pop out there. I would recommend it to parents teaching their children. I would recommend it to grandparents. If you really trust in their system, you will do well.
For more information, go to philsgang.com or give us a call at 877-600-4264.
What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money, 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 money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And good afternoon. Welcome to my podcast. For those who don't know me, my name is Phil Grande. I'm the CEO of philsgang.com, a stock trading education group. I was named Entrepreneur of the Year in the United States, and I was also named to the Inc. 500 list, where I also brought the two companies to the 500 list, the 500 fastest growing private companies in the United States. So that's what I did and do. The stock market, again, is in business has always been my passion. And what upsets me the most is when we're not being told the damn truth, what's going on with the economy. To really find out, hey, what's going on with the stock market? Everybody asks me, what's going on with the stock market? What do you think the stock market is going to do? If anyone is investing in stocks and they should do a little test, if they can't identify when a stock market is going to correct before it does or crash before it does, they should not be in the stock market. Now, I'm not just saying that, I mean that. Every professional, and by the way, remember, 90% of retail investors lose money in the stock market. 90%. That's a fact for the last 50 years. And what's funny, for the last 50 years, if you're just stayed in the S&P, on a yearly basis, the S&P's up average 11, 12%. But why is it that 90% of retail traders lose money 50 years straight? One is because they aren't willing to take the time to learn. And the interesting thing is that they're running around finding hot stocks. They write them down and then they start buying them. And they always buy them when they're peaking. That's the problem. You got to buy them when they are low. But put that aside. My point is, you got to understand the market. You got to understand how the market runs, what pushes the market. And one of the biggest things that push the market is sentiment, not earnings, sentiment. Wall Street and the fake business news network are professionals at sparking excitement, sentiment, to get people to buy stuff. The worst people are your NBCs, your Fox Business, all those guys. Because where do they get the advertising revenue? Take a look. There's advertised by Goldman Sachs, JP Morgan, the big auto dealers. And who controls the auto dealers? Who are the institution work with? Like GM and Ford and the rest of Goldman Sachs, JP Morgan, the four biggest banks. So the idea is they're never going to tell you the truth because they got to make sure that you're happy. So you go spend money so that GM will, buy airtime from them. Look at the big banks, Goldman Sachs and the rest of them. You see their ads continually. So you think the fake business news networks are going to give you the truth? You think they're going to tell you when the market is going to crash or it's in trouble or going to crash? Of course not. And that's why 90% of the people lose money, because they're getting their information from the wrong place. So again, you got to kind of take care of yourself, all right? And by doing that, I mean, if you understand the market, you're not going to have surprises. And it's so bad when the money is being made so easily. Think about it. Since 2008, the S&P has gone up about 750%, maybe 800%, and the NASDAQ has gone up maybe about 1,250%. Can you imagine that? It's been so easy to make money in the stock market. All you had to do is stay with the Magnificent Seven. Right now, what's driving this rally since April 4th? The Magnificent Seven. Who's buying the Magnificent Seven? The tourists. Now, who are the tourists? There's traders and there's tourist traders. The trader, like you and me, retail trader, we want to understand the market. We want to learn. We want to be successful at it. That's our personality. The other trader, the tourist trader, he's a pure gambler. He's the guy that goes to Vegas. He gambles on everything. That's the tourist traders. And that who's in the market right now, pushing it up every day, is the tourist trader spending $50 billion a month buying the same tech stocks. You know them, Magnificent Seven. And that's what is so dangerous about the stock market, because the institutions have turned around, the big institutions who drive the market, besides of course, the sentiment, they went and bought gold. Now, gold's up around 30%, but 40%. But if you take the gold miners, they're up 72%. The S&P is only up right now since April 32%. Can you imagine 72%? The reason we're seeing that is because the smart money, the institutional money, the pension funds, the hedge funds, the insurance companies, all those guys have moved out of tech and moved into gold. And we're seeing central banks around the world are confiscating gold. They're going after gold like crazy because they know what's coming. Because what's coming is not nice, because it's caused by deficits. And the one thing that's a problem, and when we started outsourcing in the 60s, the idea was, look, let's change what we're doing here. We no longer want to be an industrial nation. We want to be a financial nation. In other words, Wall Street was just a very small cottage industry. And they saw when technology came and the dot-coms came, they saw such a gold mine to finance what was coming. And back then, like today's AI was back then, was the dot-com. So they said, what the hell are we doing financing manufacturers, finding money for Wrangler jeans, finding money for some coffee company? No. Let's turn this thing around. It's all going. Let's make this a huge financial industry. That's what we're going to do. We're going to turn it from a cottage industry to a huge financial industry. And that's what they did. So they said, let's outsource. And then what we'll do, we'll make a deal with China, who hates us and who wants to bomb us to death. We'll say, look, let's put the bombs aside, and we're going to send you, okay, all our factories. We're going to tear them down and send them to you. You can rebuild them in China, and you take care of Wrangler jeans. You manufacture Nike. We don't want anything to do with that. Now, manufacturing, remember, is the most important thing in a nation. That's where growth comes from. That's where good jobs come from. That's how families live well. A kid could quit high school. He can go down the road and he can walk into a manufacturer. He'll get a job. That's all gone. That's all gone. So they got rid of all the manufacturing, and they said, look, we'll outsource it. But you got to do us a favor. Here's how we're going to grow our economy, with deficits. We're going to continue to spend more than we take in. Because see, when you continue to spend, politicians continue to spend more than they take in, they can spark the economy. It's like when you put the pilot light on your grill, right? Put it on and it sparks the flame. But then you turn it off. They never turned it off. They go, wow, look at this. They're going to, oh boy, look at this. The market's going straight up. Let's keep doing it. Like when zero interest rates came, right? Oh, we're only going to do that. Obama said, we're only going to do this for about 90 days the most. It's been now, 16 years, 17 years? Stock buybacks. Oh, listen to this. This is an interesting, what the hell is this guy talking about? This is quite interesting right here. I think you'll enjoy this if I can find the damn thing. Can't even get it up. No. For some reason, I can't get it up here. Bye. There we go. I just got it. Technology. Here you go. Let's see. Which one was it here? Stock buybacks right here.
The idea of buybacks topping $1.1 trillion, what does that say about companies and their outlook for not only their business, but the broader markets for the rest of the year?
And the answer?
Well, I think it's good for the broader markets because buybacks, as strong as they are, they're going to accelerate. It says that there's not a lot of great places for companies to invest in their businesses, so they're returning capital to shareholders.
Yeah, the top shareholders on Wall Street, the board of directors. Stock buybacks, okay,
4 minutes.
are horrible, because stock buybacks, all they're doing is they're taking and saying, look, we don't have to have sales anymore. See, in 2008, when the market crashed, they came up with the idea of stock buybacks. The first thing they said, well, what we got to do is we got to first get interest rates down to zero. So we'll print massive amount of money. We don't care we're running deficits. Just keep printing money. And then what we'll do is take all that money, the Fed will go buy all these treasuries to get those yields down. That will force the Fed to push, the Fed then would push their yields down to zero. That's where all this inflation started. So that's what it is. So it's that a CEO, he goes, wait a minute, look at this. Instead of buying equipment, instead of replacing equipment, instead of purchasing more IT, why would I do that? Why would I put $14 trillion into IT, expanding the building, more trucks, when I can just take that $14 trillion and all I have to do is buy my own shares, and the stock will go up, earnings will go up, fake earnings that pushes the earnings up fake, and the stock price goes up, and I don't have to sell anything. They said, wow, look at that, look at the money I'm making as a CEO. So that's how this came about. So they just would turn around and keep saying, okay, can I have some more zero interest money? This went to 2013, 2012. This was only supposed to be for 90 days. And then that inflation got crazy. So they said, well, let's stop this because of the inflation, zero rates. But they did all the destruction by then. And what we'll do instead, don't tell anybody, we'll increase our money supply by 16 trillion. And we'll push that money into the banks, and then we'll push that money back into the companies at zero rates, near zero rates, and they can still buy their stocks. What we'll do is increase the money supply, shove it in the banks, banks take it, the 4 or 5 8 biggest banks, put it into the companies, then they start buying their own shares, and the stock market keeps going up. We built the biggest bubble in history, and we've been making a fortune. Everybody's been making a fortune on this, okay? The same stocks over and over. But what the stock buybacks do is destroy your economy. Because when you have stock buybacks, they are not doing business investment. They're not taking that money and increasing business investment. As I said, they're not building new buildings. They're not doing IT spending. They're not buying new equipment. See, when you do all of that, the economy grows. Our economy grows because when you put business investment into your company, you buy equipment and so forth, productivity goes up, and then wages go up, and jobs go up, and you get a beautiful country, okay? But instead, we took all these companies, most of the companies, we outsourced everything. That's the first problem. The second problem, what we do is again, we fund these companies, and they don't care about productivity. We've come down now to we just trade about, maybe we got the Magnificent Seven and probably another, 6, 7 stocks in tech. So stock buybacks is the worst thing in the world.
You got 1 minute.
They stole the money from business investment. Business investment, what gives you a good job, not service jobs. You know that service jobs, out of that stupid idea, you know that services sector is 47% of the GDP. Service sector. Healthcare, are you kidding me? Services, 47%. And those are all the low-paying jobs. 47% of our GDP, that's insane. And you want to know why people are struggling? They can't get a good job. They can't get a good job. There's no benefits. They can't get good benefits. If you have a good job, you got good benefits. But that all stopped with the greed of Wall Street. And the government said, they're partners. Government says, let's run deficits. We'll keep spending more than we take in. And then we'll keep printing money. And we'll get interest down to zero. And we'll have a hell of a party. The party is coming to an end. And we'll talk about that next.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, you're going to learn how to play tennis, ski. You need to be with someone, learn off of them, one-on-one. Now that can be really expensive, cost thousands of dollars. But I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro. Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
And welcome back. Okay, so just a little review. How we got in the mess we're in is because a bunch of greedy people on Wall Street, not the 1%, the 1/100th of 1%. The 1/100th of 1%. And George Carlin used to talk about them all the time. I've had this cut for years. I love this when he said this, if I can get this thing over here.
You have owners. They own you. They own everything. They own all the important land. They own and control the corporations. They've long since bought and paid for the Senate, the Congress, the state houses, the city halls. They got the judges in their back pockets. And they own all the big media companies, so they control just about all of the news and information you get to hear.
Isn't that amazing? Isn't that true? And that's what happened. They're the top 1/100th of 1%, not the 1%. So understand what they did. Again, going back to the 60s and 70s, they started this outsourcing so that we could transition being the #1 industrial nation in the world to where we're a financial center. That destroyed the country because you get a healthy economy is from manufacturing. It's always been that way. Now Trump's trying to bring it back because he realizes that. The reason you can't grow the economy is because we're always running deficits. Why? Because when you don't have manufacturing and good jobs and good benefits and growing the economy, you're screwed. So what they do, again, is keep running these deficits, and to run these deficits, you have to pay them. You got to pay them down. So what they do is they keep on borrowing money to pay the deficits down. Guess who they're borrowing the money from? China. Oh, I know other countries too, but China's the main force because they said to China, and think about this, they said to China going all the way back then who wanted to blow us up with an atomic bomb, don't send a bomb our way. Why don't we send you all the work you can handle? We're going to send all our manufacturing to you. And all we want you to do is lend us money to pay our deficit because we're going to spend like crazy. We're going to spend more than we take in. Now, Trump understands we're at the peak of that now. That game doesn't work anymore. We got to get manufacturing back here because what we're doing is we're giving 7 companies carte blanche. 7 countries is the whole stock market. You pull out the 7 companies, makes it. There's no S&P 500. They're 35% of the market cap of the S&P. 7 stocks. What are you, nuts? So he's in a time race. He's saying, if I can reverse this, bring all the manufacturing back over here, and then make deals with all these companies, okay, to give me all this money, these tariffs. You know how he's making a deal? Apple is going to give me $250 billion. This company in England is going to give me $800 billion, right? And all that money is supposed to be coming out of our coffers. That drives down the 10-year Treasury yield, which is the most important yield, because that's the yield that takes care of your car, your credit card, your home mortgage, refis your house. I mean, it's everything. Your subscriptions, I mean, it's everything, the 10-year Treasury. So this is why I have to laugh when Powell says this. This is what this dope says, Powell. Boy, is he a dope. I think this is it.
The consumer's in solid shape, and that spending is at a healthy level. It's not growing.
Yeah, consumers in healthy shape. Their spending is really, really good. Well, where are they getting their spending from, you dope? They first use their credit cards up. Now their credit cards have the highest delinquencies in 30 years. That's where the money came from spending. Every morning when I hear, boy, the consumer is strong, the consumer is strong. And one dope on CNBC said, do you know people are, what's his name? Leisman. He says, do you know people are spending more money than their income? Isn't that good? Isn't that good? That's why the economy's growing, he says. He's still there. He said that during 2010. He's still there. So car payments are in delinquency, high 33 years. Last time we saw credit cards this high, delinquencies 30 years. Last time we saw home mortgage delinquencies this high 17 years ago. Home-related expenses, when you get your your paycheck and they take the taxes out, we've gone from 30% to 48%. Now, 48% of your home take pay goes to your home-related expenses. So what's he talking about? They're in good shape. See, they don't tell you the truth. That's why if you're going to invest in the stock market, you're going to know the truth, because you're going to start learning that you get the truth from the gold market, what's going on, and you get the truth from the yields, from the 10-year Treasury yield. That's what you want. So Trump is sitting there trying to fight time, and he's trying to get that 10-year Treasury yield down to survive. But the 10-year Treasury yield's going the wrong way. And it's going up, not down. The trend is up, not down. And that's dangerous. Here, let me show you. I was doing this morning. Let's see if I can find it now. Where is it? Let me get my glasses on. It's terrible to have to wear glasses every once in a while. So let's see, 10-year Treasury yield. Here we are. Okay, so let's take the 10-year Treasury yield. Can they see this? Yeah, they can see that, right?
Yeah, they can see your whole screen.
Okay, so look at this. This is the 10-year Treasury yield going back to 1983. It always was, the idea was to get that 10-year Treasury yield down. Look how it went down, 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 down. Right to 2008, okay? Right to 2008. And then it kept going down and down and down and down and down and down and down. That's what you want, because that means your mortgage is less, your car payment is less, your business loans are less, everything's less. You want it down. Now, Trump knows that we got to get manufacturing back, because if we don't, we're screwed, okay? Because you got to get that 10-year Treasury yield down. And if you can get all these tariffs and all that money coming in, they'll drive that 10-year Treasury yield down. That'll make you happy and me happy, because we can now go out and buy a car and a mortgage and afford it. But look what it's doing. It's going the opposite way. It's running against him. Now, here's what's going to happen. Come January, see how it's going up now? It's going up. And then she's been taking a pause, going sideways, because that's because Trump getting all this cash coming in, right? He's got all this cash coming, so it's going sideways, but he's got a long way to go. So Trump is trying like hell to get the 10-year Treasury yield down. Can he do it? We don't know. Here's the problem. The reason why we have inflation, okay, we can't get it down to that 2%, is, again, because of these deficits. And and so now they're saying, well, they're going to have a 25% cut. First they said it was going to be 50%. Remember when they came out? Oh, the CPI. Did you see the CPI? We don't have any inflation anymore. It came in 0.1% less than estimated. Oh, wow. Let's party. Let's say it was 2.8, but it came in 2.7. And do you really believe it did that? And they went nuts. The market in 2 days went up 1,000 points, shy by 71 points. So it went up almost, 71 was up 1,000, almost 1,000, but it was shy by 71. Do you understand that? The market went up 1,000 points. Let's just say 1,000 points. Let me lie a little. 1,000 points, 71 points is nothing. 1,000 points went up. That's insane. And what stocks went up? Oh, the Magnificent Seven. The same stocks. So the next day we get the PPI. All of a sudden the PPI is negative. It's down almost 1%. And they're going, oh. What happened was the big Walmart and all of them, what they're doing is they're eating. Now, I'm not talking about the tariffs. We have not seen the tariffs yet. None of us has been affected by the tariff. We're still running down the chain, we call it chain, the supply chain. We still have goods in the supply chain that were never involved with tariffs. That's going to come to an end in October. That's when the new supply chain comes in with all the goods for Christmas, right? So by them telling us, hey, let's celebrate, there is no inflation, look at that, we're right, tariffs are not going to touch the consumer. They're lying through their teeth because we have not had the new goods. We don't know. So what's going to happen as the new goods come in October, November through Christmas, by the first quarter of January, we're going to know. We're going to know. The other thing it's going to tell us if these tariffs are hurting us, right over here, that 10-year Treasury yield. That's why Trump's trying like hell to get that 10-year Treasury yield down. So the biggest problem right now is the reason the inflation's so high now is because not due to any tariffs, it's due to the cost of our imports. They keep going up. They keep going up. So the big businesses, the big Kmarts and the big Home Depots, they will absorb it because their mindset, the big corporations, their mindset, market share, market share, market share, market share. They'll screw anybody to get more market share. The small business, 256,000 small businesses that import are getting squeezed. They haven't even got hit yet with the tariffs. This is just the cost of importing. 256,000 small businesses. They're going out of business like crazy. Bankruptcies are up 46%. Because why? They can't survive. They can't survive on 8, 9, 10% interest, sometimes 12%. Some of these kids, young people own these stores, they can't get a bank loan, so they turn to these shadow banks. You probably hear them on the news every day. You want a loan for your business? $25,000 to $25 million. Oh, and by the way, you don't have to sign personally, and we'll get that money to you within a day. That's the biggest scam in the world. Those interest rates go through the moon. So these poor small businesses are going after those loans, and they're screwed because, yeah, there's no personal guarantee, but they got your business checking account. Boom, they got your business checking account. They pull it out automatically. So what's my point of all this? I forgot. But anyways, so businesses right now are in real trouble. Small businesses. Let me show you. I think I put up a chart for you here. Small business. We lose small businesses, we are screwed. And right now we are losing them left and right. They're closing because they just can't compete, and they haven't got hit with tariffs yet. So. Here, there's an interesting chart. This is the small mid-cap stocks. Remember, small businesses, small and mid-cap businesses are so screwed right now because they're borrowing money, as I said, if they can get it from the bank, it's 8 to 10%. If they can't get it from the bank, they're paying as much as 18%. So back in 2021, the hedge funds took $20 billion and shorted the small and mid-cap stocks, and they got a gain of 25%. They're doing the same thing today. They're starting to short $20 billion again, and they're shorting the small and mid-cap stocks again. They know they're going to collapse. That's going to be a real good short. And by the way, if you want some help with your trading, okay, philsgang.com, okay? We're a stock trading education group. We've been around for over 25, almost 30 years, and we specialize in teaching people how to trade, okay? How to trade. And you follow our portfolio, okay? Check it out. It's free, just 10 days, okay? Anyways, so what's happening now is, can you imagine? So we got Powell telling us things are great, everything's fine, right? But you got the stock market overall, the S&P overall, is so overvalued in history. We never had valuations like this. It's insane. You got only 7 stocks, actually 4 of the 7 stocks holding the whole stock market up. And earnings, when they lied to you, oh boy, earnings are great. No, they're not. That's not the truth. Here, I got a chart to show you if I can get it quickly here. Earnings they lie to you about earnings because they always say, oh, they beat estimates. Ever hear that? Whose estimate, ask them? It's their own estimate. It's not like somebody independent comes in and puts an estimate in. It's the CEO's estimate. He always lowballs them, so all people hear is, oh, they beat their estimate? Oh, I got to buy that stock. They beat their estimate? And the tourist trader has no idea. He's just a gambler. Oh, they beat the estimate? Let me buy 1,000 shares of that company. They beat their estimates. Look at this. This is, again, you want to see how earnings are really doing? We've gone from 12.2% down to today of 5%. Yeah, this is real. This is not my chart. I didn't make this chart up. Okay? This is the second quarter, 2025. So, again, the stock market, if you learn how to trade it properly, which means long and short, what a benefit you get out of it. You really do. Most people just buy. They don't know how to short. We'll help you. Go to philsgang.com, a stock trading education group.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.